Hi there, my name is Kurt Henry, and I'm with the Mortgage Center. I also work with my dad, Randy Henry, and we are a mortgage brokerage that work with multiple banks and lenders just to basically get the best deal for our client when we're arranging a mortgage. So that's what we do. This is a weekly mortgage update just to let you know what's going on in the mortgage market. And a 5-year fixed rate is around 3.49% today, or a variable rate is about prime minus 0.75, which is about 2.25%. So that's what's going on with the rates. We just want to let you know kind of how your credit score works in this video as well. Your credit score has 5 major categories that it's affected by. So the first category is your payment history. So 35% of your credit score is based on your payment history alone. So that's just like making your payments on time for your lines of credit, your credit cards, your loans. And of course, it does mean to actually make your payment a few days ahead of time, because it does sometimes take a few days for the institution to receive your payment. So if you make your payments on the due date, then it doesn't necessarily mean that they will receive it in time. So 35% of your credit score is based on payment history alone, and 30% of your credit score is based on the amount owed. So that's not saying, though, that somebody that owes $10,000 is worse off than somebody that owes $1,000. The amount owed is referring to how much you owe compared to what you have available. So if you have a $2,000 limit on your credit card, a lot of people think that they can use $2,000, and you can, but if you do, it will hurt your credit. And the only reason is because if you use everything that you have available, you're saying just that to the credit bureau, which is the fact that you're using everything that you have available. So you're maxing yourself out. What you want to try to do is use less or 50 to 70% of your credit limit on credit cards and lines of credit. And if you do that, as compared to using like 100% of your limit constantly, then your credit score will get better or stay good if it's already good. So that's just the first two things, and that's 35% and 30%. So total 65% of your credit score is based on those two things alone, which is just making your payments on time and the amount that you owe compared to what you have available. So just keep that like 50 to 70% of the limit, and that will help your credit. The third thing that affects your credit is length of credit history. So 15% of your credit score is based on length of credit history, which is just saying that if you've only had one credit card for like 1 month, then that's not quite as good as somebody that would have had one credit card for the last 2 years or for the last year. So length of credit history is an issue. And the fourth item that affects your credit score is new credit. 10% of your credit score is based on new credit, and another 10% of your credit score is based on the type of credit being used. So there's the type of credit being used. One type is a revolving account, which is like a credit card or a line of credit. And a revolving account is one where you pay it back and then you can borrow it back, and you can pay it back and you can borrow it back. So that's like a revolving account. The other type of account is an installment account. So an installment account is like a loan, or like a car loan, for example. That's where you're just making your payments month after month after month, and your loan is decreasing over time, and when you pay it off, it's done. So that's an installment account. It's good to have a variety of different types of accounts. So those are the 5 major things that affect your credit. The other thing is certainly collections, or if you've had a dispute with a certain company, like a phone company or a hydro company or whatever. It's always a good thing to make sure that you don't get to the point where you're saying, you know what, forget you, I'm not paying you because I don't agree with you, company, whoever you are, because at the end of the day, it will hurt yourself, or it will hurt the consumer much more than it ever hurts that company, because if you have a collection showing on your credit bureau from a phone bill, for example, it will always come back to bite you, almost 100% guaranteed. So the best way is to make sure you get it rectified one way or another, and just make sure it gets fixed on your credit bureau so that there is no collections. No matter how much goodness you're doing with your credit score, in terms of the 5 things we just mentioned, if you have a collection on your credit bureau, then that's just like an anchor, just basically like keeping anything good that you're doing, and just kind of like an anchor, and just holding it in like a bad territory there. So so just make sure if you do have collections, get rid of them. That's the first step, and then after you get rid of the collections, then work on the 5 things that we just went through. If you have any questions at all, the best way is to call the person that actually sent you this video, and then if you have any questions from there, feel free to give us a call. The number is 905-436-8010. All right, thank you, and have a great day.